How many shares of that company should I buy? Should I buy Apple? Should I buy Amazon? How much should I invest in the stock market? No matter if you're a beginning investor or an expert, we all ask ourselves these very same questions. And sadly, there isn't one simple answer that fits for everyone because each person makes their own unique income, spends a different amount on bills each month, and has a different amount saved in their savings account. So, today I'm going to share with you how to answer this question and how much you should be investing in the stock market. Also, if you're not already subscribed, my name's Michael. Hello, nice to meet you. And it would mean a lot if you could subscribe to my channel. With that being said, let's get started. There are 4 questions that we are going to go over in today's video that every single person should ask themselves before investing to help them determine how much money they should invest and where they should invest that money. But be sure to stick around for the very last question or skip to it if you like, because that question helps you determine how much money you can even invest in the first place. The first question is how much passive income do you want to make from your investments? This should take into account not only the things you want, like a new house, a new car, but it should also take into account things you need to live, like how much you pay on your bills, how much you spend on food each month. It should take into account everything. And this number will be different for everyone. Some people might only need $50,000 a year to live. Some people might need $100,000. Other people might need $500,000 a year to live. But this number will be different for everyone. A good rule of thumb is to divide how much you need to live each year by 0.04, because that is the total assets that you'll need to be able to live without doing anything, with strictly passive income. Because 0.04 is a reasonable amount. 4% is a reasonable amount that you can expect in dividends from companies you own. So you see, the way it works is you divide that number by 0.04, you calculate that, and that is how much you need to have invested in dividend stocks to be able to live on strictly passive income alone. Let me give you an example. Let's say you need $80,000 a year to live. Divide that number by 0.04 and you get $2 million. This means that you need $2 million invested in dividend stocks to live strictly off the passive income from the dividend payments. Because with $2 million invested, you'd receive $80,000 every single year without ever doing anything. And you would never, ever, ever run out of money. You would keep that same $2 million, and if the stock goes up in value, you'd still make money, but you'd be able to live off of the dividend payments alone. The next question you need to ask yourself is how much volatility are you willing to take on? And essentially, what this means is how much risk are you willing to take? Are you willing to see your investments fall by 50% before they go up 100%? Or do you want to see a more steady growth that might not grow as much, but it's steadier and it's more consistent? That's what volatility means. And with investing, if you have a high risk tolerance and you could take on a lot of volatility, you could make a lot of money in the short run, but you could also lose a lot of money. And why this question is so important and is one of the 4 questions on the list for today is because it determines exactly where you'll invest your money. Should you invest your money in, one risky stock or a stock that isn't as risky? Should you even invest your money in the stock market in the first place? Because if you can handle more risk, you'll invest mostly in stocks, maybe some riskier stocks that have a high potential for growth. But if you don't have a high risk tolerance and you can't handle a lot of volatility, you might not invest in stocks at all. You might invest in bonds and funds that are diversified, aren't going to produce a great return, but they'll be pretty stable, pretty flat, and they'll produce consistent results. So that's why asking yourself how much volatility you are willing to take on is so important for how much money can you invest, because it determines exactly where you will invest that money. Is it going to be the stock market? Is it going to be all bonds? Is it going to be a combination of both? How much risk are you willing to take on? Next is what age do you need that money, and how much money do you need at that point in time? It's a pretty reasonable question, because think about what your goals are, what you want to accomplish with that money. Then think of the time period and think of a reasonable rate of return for that time period. How much you want to make in your investments during that time period. Then what you could do is you can calculate how much money you need to invest every month, every week, in order to reach that goal and be able to better reach that goal. You can do this by using a lot of online compound interest calculators. There are a number of them out there. There are dozens of them. For example, if you don't need your money until you're after 59 and a half years old or 60 years old, you can look into a number of tax-free or tax-deferred accounts, which would be huge because a lot of your expenses will come from just having to pay taxes alone. And if you look at a IRA or 401k, those are good options, but you can't access your money until after you're 59 and a half years old or 60 years old, and then you wouldn't have to pay as much on taxes. And that is a good way to think about investing your money because you'd save a lot in the long run. That will help you determine how much to invest. Finally, the most important question of the video that you should ask yourself when determining how much you should invest is, to what degree are you willing to sacrifice your current standard of living in order to reach your goals? Let me explain. This is so important because think about it. You can make $50,000 a year and save more than someone who makes $500,000 a year simply by spending less. For example, if you spend $500,000 a year and you make $500,000 a year, you have $0 to invest. Zero. But if you make $50,000 a year and you can live off of $30,000 a year, you'll have $20,000 a year to invest. So, it's not how much money you make that will determine what you can invest, but it's how much you spend. Because if you can live frugally and live like a minimalist and save money, then you'll be able to invest more and make more in the long run, even if your salary and your income is way lower than someone else's. So with these 4 questions, the first, how much passive income do you want to make from your investments each year? The second, which is how much volatility are you willing to take on? The third is, at what age do you need to access this money? And the fourth, to what degree are you willing to sacrifice your standard of living in order to reach your goals? With these 4 questions, you'll be able to determine how much money you're willing to invest and how much you can invest. And remember, the more you can invest now, the more money you'll have later on because of compound interest. Over time, if you can invest earlier on, it'll grow and grow and grow and grow to more if the earlier you start to invest. If you wait till later, then you're not going to make as much. So the more you can put in now, the more you'll have in the future, which is very important to keep in mind. So by using these 4 questions, you'll be able to better determine how much to invest, how much you can invest, and when you need the money, how much you need. It'll help you answer all of those questions. But in my opinion, you should save and invest as much as possible now. I know, you only live for a set number of years. You don't live forever, so you can't save forever and just save money. You have to spend it. But if you're happy with your life and there's money you don't use, don't spend it. You might as well save it and invest it for the future. Anyways, I hope you guys enjoyed today's video. Thank you so much for watching. Also, if you haven't done so already, please like the video down below and subscribe to my channel so you can be notified when new videos come out. Quick reminder, if you'd like 2 free stocks to get started investing, download Webull using the link below. If you'd like 1 free stock, you could use that too. Download Robinhood with the link below. And if you'd like $5 with Acorns Investing App, use the link below for Acorns. I post a minimum of 3 times a week on this channel. And as always, thank you so much for watching, and until next time.